Today, PayPal makes it easier for users to transfer crypto. A bipartisan pair of senators announced a bill to classify digital assets as commodities. What does that mean for crypto investors? We asked the CEO of Swan Bitcoin. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currency prices pulled back this morning, wiping out yesterday's gains. As of noon Eastern, Bitcoin fell to the $29,000 level, Ether was worth around $1,700, and Polygon was worth around 60 cents. All right, let's catch you up on the top stories. First, PayPal now lets customers send and receive crypto through external wallets. Supported cryptocurrencies, Bitcoin, Ethereum, Bitcoin Cash, and Litecoin can now be sent to outside exchanges or hardware wallets. Users can also send and receive crypto within PayPal with no fees. As part of the deal, PayPal also became the first company to convert conditional approval to operate in New York State, known as BitLicense, into a full license. Next, online payments company Checkout.com is also jumping into the crypto payments game. The platform will partner with Fireblocks to settle payments in stablecoins. Businesses will be able to make and accept payments with the USDC stablecoin. Checkout.com competes with names like PayPal and Stripe, the latter of which just recently launched its own stablecoin payments feature. Finally, a bipartisan pair of U.S. senators just revealed a bill with sweeping crypto regulations. Senator Klippsten, a Democrat from New York, and Senator Cynthia Lummis, a Republican from Wyoming, introduced the Financial Innovation Act, which would designate most cryptocurrencies as ancillary assets. Now, these assets would be treated like commodities instead of securities.
The most important goal of this legislation was to create safety and soundness, to create consumer protections, transparency, accountability, and certainty. When we met with industry leaders, they basically said, we just need to know what the rules of the road are. We've been seeking regulation from various regulators, and the delays in response have been unconscionable. And so what we did was common sense. We used existing definitions. If you're a security, you're going to pass the Howey test, which is the securities definition. And for CFTC, we already had the futures market, so we added the spot market for cryptocurrencies. And we look at each digital asset's purpose. And based on the purpose, we've aligned the regulatory framework around that purpose.
The bill would also put the regulation of those ancillary assets under the CFTC, not the SEC. For our main story today, I spoke to Cory Klippsten, CEO of Swan Bitcoin, about what this change in classification of crypto would mean for individual investors and Wall Street. So there's a new bipartisan bill just out today that would mean sweeping changes for crypto regulation. One of those changes, many cryptocurrencies would be treated as commodities rather than securities. So the CFTC, of course, taking on a big role in regulation. Now, Cory, you worked on Wall Street, and I think we just start with, what would that change mean for investors?
Yeah, so the way I read the bill is that they are still going to use the Howey test to distinguish between essentially, basically placing the ones that fail the Howey test in commodity land, regulated by the CFTC. And then if it passes the Howey test, that means it is a security. But they're going to make an allowance for those ones that are deemed securities because they pass the Howey test, that if they are some sort of ancillary asset to a decentralized network, that they would have a different sort of reporting regime to the SEC. They were talking about disclosure of all the things you would disclose to the SEC, but doing that twice a year, essentially.
So you mentioned that the Howey test would be a key part of how regulators would divide cryptocurrencies into one of these two buckets. Can you walk us through the basics of that?
Yeah, absolutely. They're trying to determine whether an investment contract exists, and it's a four-pronged test. And basically, if you pass any of these, then you're basically a security. So it's an investment of money in a common enterprise with the expectation of profit to be derived from the efforts of others. So essentially, if you, say, take Ethereum back in 2015, and there was a central group of people that said, hey, we're going to create this thing, and the price of it is going to moon, that would be security. So, we'll see what happens with Ethereum now that it's many years later, and I think the indications are they're going to let it pass and sort of give it a pass. But it would have been a security if the Howey test had been applied and if the SEC was actually looking at the space back then.
So what do you think this bill means for the adoption of digital assets among individual investors? Do you think that some people who were waiting on the sidelines are going to feel better about getting skin in the game now that there's more of a comprehensive framework?
Yeah, I think that will absolutely happen. Obviously, I'm a huge proponent of Bitcoin, but even for me, with that sort of selfish perspective, this is going to be fantastic because it's going to delineate between Bitcoin and other things that are going on in the space and just place them cleanly or much more cleanly in different categories. So I welcome that type of clarity. I don't think we're going to roll back to being able to say these cryptos and altcoins are securities. But I think it's fair to let people have their day in the sun, shine a light on it, go to court if you need to, and at least have an apparatus in place and agencies in place to be able to handle this. Clearly delineate between what is assigned to the CFTC and what is assigned to the SEC. I think this is a really good move.
So the bill looks to encourage the use of cryptocurrencies as a medium of payment. And one way that they're doing that is by saying that any transactions up to $200 are exempt. They're not considered taxable events, which is certainly useful because anytime somebody bought a cup of coffee for $2 with Bitcoin, there were tax implications for that transaction. But my question is that enough? Like some people want to pay for a car in Bitcoin, and that would still be considered a taxable event.
Yeah, I mean, I think the game theory is that inevitably in the future, when I think Bitcoin will be considered money and it'll just be another money that we use as humans, then you won't have cap gains tax from its rise in value versus the US dollar. But as an intermediary step and getting people used to it, I think it's great. Obviously, I'd love to see that level at 10,000, just like reportable transactions. But failing that, it would have been nice to be at 600, which is I think the level over which you have to report compensation and get a 1099. But, starting somewhere is great.
So what does this mean for institutional interest?
I don't think it's enough to sort of separate crypto from sort of the secular downtrend in tech stocks and in the economy broadly. What I do think it does, though, is provides a very firm foundation for sort of the next leg up when the Fed takes off the brakes and goes back to QE or neutral in 6 months or something like that. If something like this is in place or close to in place, I think it will give institutional investors a lot more comfort to place large bets on the space.
And outside of Bitcoin, is it a win for other cryptocurrencies or other players in the space?
Well, I will tell you, a lot of the crypto folks, the fund managers and the exchange people are freaking out because of the transparency that is going to be required of the exchanges in particular. You have to remember that how this works is these coins pay a listing fee to the exchange, and then they give market makers that are sort of coordinating with the exchange huge piles of tokens and USDC or Tether or BTC to work as trading pairs, and they literally paint the chart over and over again to try to get people to buy these things on the exchanges. So the market makers really do kind of control the price in the micro of what's going on with these things. So shining a bright light on all of that, I think will probably just I would guess that the whole crypto trading industry is basically heading toward a much lower trajectory from where it otherwise might.
Okay, that's all for today, but you can find that full interview over at cnbc.com/cryptoworld. We will be back again tomorrow, and we'll see you then.